Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brendan Ahern, Chief Investment Officer at KraneShares, for an update on China and to discuss why getting targeted emerging markets exposure based on new economy sector selection and demographics is a more effective approach than broad-based. Brendan, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill.
All right, Brendan, let's start with a COVID-19 update and an overview with China.
So China was definitely first in, first out. There's no cure, there's no vaccine in China today, but they've effectively put coronavirus to bed through a very effective quarantine. And this isn't just a China issue. Unfortunately, in broader Asia, we've had several pandemics in the last 2 decades, if it's SARS, H1N1. So if you look at cases, Vietnam, 100 million people, under 400 cases, Taiwan, 25 million people, under 500 cases. These quarantines are taken very, very seriously in Asia, and China is kind of first in, is now first out.
A lot to be said about wearing masks and social distancing. So
Sure.
as a first in, first out country with coronavirus, what's happening with China now economically?
So China went back to work out of economic necessity, that they realized that the economy was going off a cliff. And so having enforced a very effective quarantine, they are certainly 100% back to work, and they are getting since their Q1 was the quarantine, we're getting a V-shaped Q2 rebound. So the economic data is coming out very, very strong. The corporate earnings we've seen have been strong, as well as, more importantly, I know there's a lot of suspicion around China economic data, high frequency data. Tracking mobile phones, GPS, mobile payments proves out China is back to work and back to spending.
Year to date, the 3 largest emerging market ETFs have lost $14 billion of their assets. Broad-based emerging markets are up only 195% versus the S&P 500 up just over 500%. Is China a big part of that index? Why is it underperforming so much?
Yeah, I mean, broad-based emerging markets is not even up half of the S&P 500. And I think the problem is really around when we think about emerging market investings, we think about urbanization, a growing middle class, adoption of mobile technologies, online consumption. But broad-based EM is a very poor transmission vehicle for that thesis. It's predominantly made up of value, slow, low growth sectors. Financials, energy, industrials, materials, utilities make up nearly half the index, and we are in a very growth geared market. And unfortunately, the broad EM is a value play.
So would you say that's the culprit for broad-based emerging market underperformance? Because it sounds like there are pockets in there that could be outperforming.
I mean, what we've been very focused on is really pulling out of that broad EM some of these growth names. You know, we started seven years ago with our K-Web, our China Internet and e-commerce, which is getting close to its 7-year anniversary, and we've actually beaten the S&P 500 very, very handedly since inception. And so we know that, you know, EM, like China, you have this old economy implementation vehicle, and you have to get more specifically and pull out these growth stocks. And we've applied the K-Web thesis to broader emerging markets with our KraneShares Emerging Market Consumer Technology ETF, KEMQ, which again is just these growth names out of the EM benchmark.
So that's really what the solution is then.
Yeah, I mean, we believe. I mean, obviously it's highly biased and self-serving, but I think when you look at what we did with K-Web, where we've been able to outperform broad EM by, you know, literally over 1,000%. You know, how is that possible? It's really driven by this growth. We're in a growth market. K-Web holds these growth stocks, and I think as a firm believer and shareholder in KEMQ myself, I believe it is the best part of EM today, and a great complement. I'm not saying you sell your broad EM. I'm just saying you can use KEMQ as a growth dial if you believe, like I do, that coming out of the work from home coronavirus, these growth names continue their leadership.
So to wrap up here, what role does this play in an investor's portfolio?
Well, again, I'm not, even though we're seeing, Jill, to the statistics you provided, we're seeing a little bit of a mass exodus from the EM base, these broad EM ETFs. But I think I'm not saying that you should sell those, but I'm saying you can complement those positions, complement your U.S. stocks with KEMQ to act as that growth dial. That if we stay in this growth geared market, if you buy broad EM, you're not going to participate, in my opinion, and you got to get more specific, and that's why we listed KEMQ a few years ago.
All right, Brendan, thanks so much for joining us on Trade Talks.
All right, thank you, Jill.
And
Stay
thanks for
safe
joining
and
me.
healthy.
Thank you, and same to you and your family. Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.